Unfortunately, this free version, I only get 10 minutes, so that's cut me off for the last video. Uh, so, unfortunately, I'm still a poor trader. Got to change that here. Start getting my act together and making some money. But so Apple kind of beat me up on this day right here. So if you see, it went new high, and then it kind of that day it just kind of chopped around, and I got beat up a little bit. Didn't show me too much. It really, if it had commitment, it should have popped on that day. Then I didn't really follow it the next day. Again, that mission day we launched on a mission, I was out of the loop, so I really wasn't following that day, and that's the problem when you're not doing this full time. Although this was the Friday, this was Thursday, this was Friday. I just missed this move. I actually bought it at 609. I just the pain on this day. I lost. Not, little paper cuts, but they add up. It really just gets you frustrated. I kind of missed the rest of this move, but Apple looks great. I mean, it has looked great since earnings. I mean, this is an awesome chart right now. Fortunately, part of it was my time frame. I should have held some on a longer term basis. Then this day wouldn't have been that painful. Amazon, I bought this one as well. Again, this was another one that actually was done the same. This day was a little bit of a whipsaw. Not a big deal. Got out of it. Then I bought it back on Friday. Sold it. Sold it this morning. Off the opening, you see right now it's actually lower than where I sold it. Facebook, I didn't buy, but this is great. This is exactly what you want to have happen when it breaks this nice little pattern here, and now we're back into that relative strength area. This is where you want to get long Facebook. Not today when it broke. Basically, when it broke this level here. So sorry about that. Algae season here has been pretty brutal, and a lot of pollen today. So Facebook looks good, especially as it broke this level here at the 57.5 level, and now we're up quite a few points here. Great social media play. LinkedIn, I actually played this one. I like this one a little bit better, and when it broke this 150. 3.5. Again, it wasn't the great. I mean, it kind of broke up. It was good, but the volume really wasn't there for the most part. It looks like today the volume's there. And today it's been strong all day. Opened up and just keep blasting higher. So I have quite a bit of this. Fortunately, today it's sort of playing catch up. The whole social media play is, again, the level was 153.5. Right now we're trading almost 10 points higher. So, which is all good. Like I said, Facebook's actually a stronger chart, believe it or not, on the long term, because it's right now at this point less than 10 points from all-time highs. And LinkedIn's been a dog for quite a while, and it's just finally coming off the map. Let's contrast that to Twitter. I know this is one that's near and dear to you. Acting like shit again today. This is relative. Look at all this red. This is all relative weakness. So just be warned. This is. I know you got a nice little trade in here. Hopefully you went short puts. Hopefully you covered those, or they were only short. Or they expired already. This is the time to cover them, especially as you see the relative strength. You had a little bit of relative strength in here, and it just withered away. Doesn't mean it's a short. I'm not saying, hey, go out and short it. But in a big up move like this, in high beta, and this stock now is flirting with unchanged, that's unsatisfactory. And something to keep an eye on. 29.5 is the low, and that's one of those things. I think the IPO price was 26 or something like that. So this may be where it wants to go to find the next level of support. But at this point, I'm not going to pass judgment. It's just relatively weak. That's all I can tell you, which is not a good sign. but who knows? Anything can happen tomorrow. But I just wouldn't want to be holding that below 29.5. So just something to think about. So we went over a lot of these high beta stocks: LinkedIn, Amazon, Apple. I mean, they're all definitely coming off the mat. I got into a bunch of other second tier, CNQR, a bunch of second tier names. Remember I mentioned Vive to you a while back. So this actually is, the target price is 21.5. Actually reached it this morning. I'll sell it if it gets below 21. Faye got involved in last week. Actually sold on Friday. But again, this is like those treasure to trash trades. It's been a complete trash. It was, big runner, but I bought it down in here, sold it here. Fuel is another one of these like recent IPO type stocks. I bought some of that above 22 and change. Now it's around 25. Sold that, I believe, on Friday as well. So there was a bunch of these trades to be made and take advantage of, which is nice. See here, LinkedIn. Here's my intraday. So it's it's doing all right today. So I'll just run through some of these. Again, Google right now is what's helping things out a lot. And that's about it. I mean, right now I wouldn't be chasing things. I would not be looking to buy more here. What we want to see is sort of this. Maybe today's the climax in the this latest up move, and then what we want to see at that point is the market sort of retrace, and what we want to see is fine. We want to see it close out strong today, maybe gap up tomorrow again, and then that be the mania. Everybody talking about this new bull market and this, that, and the other. If you turn on CNBC, they start talking about it. I mean, all last week, all they were talking about is 10% correction, which I think helped fuel this up move. And if we get a gap up tomorrow, perfect situation, that may be the time to sell. Definitely sell. And then what we want to see is maybe some sort of a retrace or a day or two pause, whatever it takes. The less it retraces, the stronger it is, I believe. Again, relative strength is everything. And then maybe we get another move higher. Let some of these stocks like Netflix reset and keep going higher. So, but we'll play it as we see it, like we always do. I just want to also go back to, this has been a